So the next time it will take out that low and brush it out. So these two lows, so let me draw something here so that you will see. So these two lows is further increases our claim that the market is really going down, because remember the lows are the targeted liquidity. So now it has given us relatively equal lows. What do you expect? It will attract the market. It's a magnet. It will magnet the market to this level to destroy this low, man. It took out the low. Can you see? To form a new low. So from what I'm showing you now, you can see that the market is gradually giving us lower lows, right? Lower lows, lower lows, and the lows are the targeted liquidity. Just imagine if you have knowledge of this. Are you understanding me? If you have knowledge of this, it means you will keep making profit and doing what kind of trade? Buying or selling?
Buying. Sorry, you were selling.
Selling now, you say
No, you're
buying.
selling. I know you're
you
selling. When you say
you will
selling.
just be doing selling. And where are you going to be selling? You'll be selling at the highs, because the highs are the premium price. You want to sell when the prices are high. You sell at the highs and taking your profit at the lows. Selling at the highs, taking your profit at the lows. But can you see that this whole thing is a trend? And you can even see that this my two moving average is sloping down, fanning down very well, right? So this thing keep on happening. Remember, is this market structure shift I want to show you. So this thing keep on happening until up, down. But let me just jump to this point, because it's something that happen here, right? Up, down, right? Or wait, let me just complete it so that we up, right? Let me jump to this one, down, jump to this. This thing is so fine. Because in most cases the thing can confuse you, but this particular one I'm doing, can you see how beautiful it is? Down. Now guess what? Watch this. Remember, this time it moved up. It's not supposed to go higher than this high, but what happened?
It went
It
higher.
went higher than this high. So what is it called? The
Direct
shift.
shift.
Ehen. So once you have seen a shift, come on now, what to come to your mind? This downward trend is getting weak. It's about to what? To turn. Can you see that we are clearly seeing it on a H4 time frame? I know what, if you see it on H4 time frame, it means you can trust it. Why? Because the noise or the dribblings on this higher time frame is less than the dribbling we have on
The
1 minute
1 minute
or
or
five
later.
minutes. So this is the shift. I know anytime we have that shift, like I showed you this one, there is a shift. It will retrace for a better price. So it retraces for a better price. Can you see the amount of retracement? So let me even use this one. See how much it retraces. So that means from here, I'm not thinking about. In fact, once I saw this, I'm not thinking about selling again. So this movement downward, perhaps I'll not even be on it. I'll just leave it. Why? In my mind, this is about to turn. So let's see what happens next. Let me zoom in. Right? So let's see what will happen next. Then from here, see what happened. It now traded, it now gave us this high. So let me show you something. It will interest you. This high, is it not above this high?
It is.
Fine. It means we have started going up. By giving us this high, just imagine if you cash, and which day is this? 9th of June. Just imagine if you, and I see all of these boxes at the analysis I did previously this morning. Remember when from this thing I've been teaching now, all of these boxes, what do you think they are called? Targeted
Targeted
liquidity. Because now even when the market was here, it was targeting this one, it took at it. When the market was here, it was targeting this one. That's why it keep going up. So from what I've showed you, we have successfully shifted, right? From what? From a downward move to what?
upward.
Upward move. Now see, you see this understanding of the market. That's what brings the profit. You guess what? Somebody asked me now, where is market? Where is Euro USD going now? I said it's going up. You guess what? When was doing this? Where is Euro USD going? It's going down. You guess what? Now I'm going to show you and take you to a point where you now have to move from this H4 time frame, knowing that it's already going up on H4. Now go down to a lower time frame, like say 15 minutes, to pick your trade, following what is happening on
On
the
the
H4 time frame. So let me just show you this so that we can wrap this up. So then from here, you can see that these lines they were already here. This was where I stopped. So all these lines is the one I use for the analysis this one. So from here, after from here, we're already on upward trend. Now at the point when we have not seen all of this, we have already concluded that we are on an upward trend. So from here it retraces, right? Fine. So after that retracement, what next? It will impulse again. So look at this new impulse. I have already measured it. See this high is higher than this high. I'm telling you. So this is a new high. Then from there again, it will retrace. But see this retracement is a very big retracement. It will retrace to this point. Then it impulse again. Can you see that we have successfully shifted? The job is for you to identify it on the chart. It's not this fine drawing on the paper. So we have shifted again to a higher to a higher high, right? Then let me zoom in. So at what point are you going to be starting the trading or the buying and selling? After it has broken this high, we call it break of structure. We expect a retracement. So it retraces into this area. So how do you know a good retracement? That is where we use Fibonacci. So let me now teach you Fibonacci. This button, this icon, this tool with a small f by the bottom right is called Fibonacci. So how do you use it? You would now we use Fibonacci to know how much the market will retrace before we enter to continue the buying or to continue the selling, as the case may be. So now you have to draw from a point A to a point B. That means 2 points. So how do you know the 2 points? That's an challenge most traders do have. So remember this was the low that was responsible for taking out this high. So you draw from that low to the high. So if this market is already retracing, draw from the low to the high. So watch me. I'll draw from this low now. This is the exact point it started to this high. So as you're drawing it will give you all these lines. So there was already there. Fine. Let me draw again. You draw from this low. You can see the screen. You draw from this low to this high. So you can see all of these numbers by my far right. You know, so these numbers are the Fibonacci levels, right? And golden ratios that you can use. Now, once the market trade below 50%, it attracts the attention of traders. Since we are looking at upward trend, once it trades below 50%, see it has got see the retracement went below 50. Traders will now say, the market has given us discounts. That means the price is now low, attracting who? Buyers or sellers? Buyers. So fine, thank you. It will attract buyers. So anywhere below 50, 61.8, very fine. 78.6, very fine. Anywhere, but it should not go below 100. If this thing move below 100, that means we have seen the shift. See, that 100 is the shift. That is 100% replacement. Anything above 100% replacement, that means the market is giving you signs of weakness. So that are you understanding what I'm doing? Now that below 50, so I normally use like I'll just use a rectangle and draw like this, something like this. So anywhere inside here is where I want to look for the opportunity to do what? To buy. But not on this time frame. I'm not going to 30 minutes. Lower time frame. 15 minutes. Even 5 minutes. Now I want to place my trade there on that lower time frame. But am I following the higher time frame? Yes.
Using to make your analysis.
Yes. So that lower time frame is the entry time frame. This higher one is the analysis time frame. Can you see? That 15 minutes, 30 minutes, or even 5 minutes time frame is the entry time frame. This H4 time frame is the analysis time frame. So now let me color it. The reason why I want to give it another color, so that we can differentiate it, right? So let me give it where is this other color? This color, very light color. Where are the light ones? Okay, fine. Let me give you this one, right? So the reason is so that if I switch over to 15 minutes time frame, we should be able watch you, or even 5 minutes time frame, we should be able to identify and look at that particular point. So that place I highlighted, let's look for it. So see where I highlighted inside here. So precisely see where I highlighted here. So actually, so let me zoom in. Actually, it is inside here. Sorry. It is inside here, this exact point. I see in this point. So it is inside here. I will now look for the buy opportunity. Now, what is the buy opportunity? Inside here, I will now look for. Remember, the price was going down. So inside here, I will now look for a what we call change of character, the same shift, a smaller one for a smaller time frame. See what it means. Watch, let me draw it so that you will clearly see. This is a downward movement. Low, a high, you know, a lower low, you know, a high, a lower what? A lower low. So that means it's going down. So that change of character I'm looking for, or market structure shift, is when the market, because I'm looking for the market to start going up. When the market just slightly move above this high, right? So this is two equal highs, but see the real one that move above this high, then it has shifted on the lower time frame. That's the change of character. So any further retracement, Pakam and buying here. So this is the right place to buy. Can you see how we're able to analyze and know the exact point we should be buying? This is the right place to buy. Now, just imagine, that's why I like this market. If you miss this one and it left you, can you see that it retraced again, giving you another opportunity? Oh, trading is sweet, man. It retraced again, giving you another what? Opportunity. So that means this area, let me highlight it, this area is a place to buy. So your buying should be happening here. So if you should buy here, will you make profit? Sure. Now you see this movement, this analysis is not on this lower time frame 5 minutes. It's the higher time frame that you just followed. Do you understand it? Do you have questions? Or you understand everything?
My question now is, like you explain it to me now, practically. My question now is to understand or to know when to place buy and when to
Fine.
place sell.
Yes, now no. When to place buy, when to place sell, from what we saw on the H4 time frame, what kind of trend is this? Upward trend. So you just buy, you want to do. Now, but we're not looking for the exact point to enter the
Yeah,
buy.
that's what you're saying now.
The exact point to enter the buy is what I just showed you now. We waited for this price to retrace into Fibonacci area from 50 to 61.8. So inside this area, we didn't take our trade here. We now even went down further to a lower time frame. I think it was 5 minutes time frame. So we now saw the exact point. We now saw the exact point. This is the exact point. Like, this is the exact point. So this is when, to answer your question, this is when you are to enter the buy trade. Pakam, just place the buy here. And then after entering the buy here, then where will your stop loss be? Quickly let me and take profit. So your stop loss can be as low as this low, because now you either use this low or you use any other low. But this one is low, it's fine because it give a good risk to return ratio. Risk is stop loss, return is take profit. So it will give a good risk to return ratio. So if you're entering a buy, so let me use line for it. If you enter a buy here, let me drop a line there, pakam there, then your stop loss should be just here. Then your take profit can be times 2, times 3, times 4 sef. Or you can use the take profit of the higher time frame, H4 time frame, that our targeted liquidity. You can see that this price later went to that targeted liquidity. Let me show you. Let me go back to H4 time frame and show you. So now this was the point we were, right? Where is targeted liquidity? Yeah. So you notice the see that first line. Sorry, let me delete this one. See that first line, we say you have to enter the trade. This line, this line is where we say you have to enter the buy on that lower time frame. This is where we say you have to put the stop loss. Now see the targeted liquidity up here. So that means your take profit can be here. So can you see that we have to move back to H4 time frame to know where we're going to set our take profit, targeted liquidity. So can you see this distance? From here to here is stop loss. From here to here is take profit. It's almost 1:3. That means you're risking 1 to make 3. It's something like you're risking 10,000 naira stop loss to make 30,000 naira take profit. Or you're risking 5,000 naira stop loss to make times 3. That will be how much? 15,000 naira. That's a good trade. It's a good trade. So you can see, not only is structural analysis beautiful, it gives you a good risk to return ratio. Do you understand it? I'm telling you, that's how to trade. Now you see, this thing will not just jump into your head one day. Are you understanding
I
me?
know.
So
Just
it will
gradually, gradually,
take
gradually.
practice every day, looking
Because
at
some
it.
people are asking, say they be here for 1 year, for 2 years, for 3 years, but let it be continued that should be coming. But I know it.
It, it takes practice, always following it up. Then, of course, you'll be good. You'll be good. So this is how we analyze the market and come out with good profits on the market. Okay.